All right, I'm here alongside Donnie Gilbert. Donnie, good morning.
Good morning, Andrew. So, jumping in, straight in, Friday morning, outbound tender rejection rates. They've kind of gone down here. We're still below, we bounced back above 20%, but then right back below 20% here. We're currently at 19.91%. But looking at volumes still at 15,472. So we still got a high demand for trucks out there. But there's a lot of questions right here. It's trending down, trending down, trending down. I'm not worried about that. Let's jump in and break it down by dry van and reefer first. Then when I get to dry van, I'll explain why I'm not worried about it. Because when we hop over to the next chart here, you'll see that reefer is actually trending up. They're at 37.33%. So these downward trends are being drawn in by the dry van market. Currently, reefer's at 2,174 index points for volume. So we're very strong on volumes. And we see that, here we bounced up. We came down a little bit through October in reefer, which is a historical trend. We normally follow this and then expect this to trend up all the way through Thanksgiving. Not a huge amount, but I think last year it went up about almost 10%. We're starting a little bit lower, so it may go 8 to 10% by the time we get to Thanksgiving on rejection rates. So it'll get pretty high there. There will be a lot of more volatility entering the spot rates in reefer as we get on in closer to Thanksgiving. Of course, we're going to probably have some issues with supply chain stuff in the grocery stores as well. So that could also counterbalance that as well. So we'll see how that keeps moving, but something that you want to pay attention to.
Yeah, just seasonally, a lot of turkeys, a lot of yams, a lot of stuff moving here.
And as it gets colder here, here this morning, we're close to the 30s. Some areas in our area is already down to the 30s, but we will start picking up those products that are to protect from freeze. And I'm not talking about just even the water or the some of the beverage stuff. I'm talking about, you used to have a lot of supplies. Paint is one of them. You can't have paint freeze, it'll ruin. So a lot of supplies like that will be kept moved in a reefer, either just for the insulated walls, or you can actually go to a reefer now, and it's just like the heat pump at your house. You can turn it on and you can set it at 40 degrees and it'll keep it warm and obviously above 30. So you can keep it warm to keep those goods in great condition. All right, bounce over. Let's look at dry van. And here's what is actually pulling this average down here right now. Dry van, it dropped below 20% back here near the end of October for the first time since July of 2020. So here we dropped down below 20%. We're at 19.19%. Now there's a little bit of, does this mean that spot rates are falling off the charts? The answer is no. And this is why. If you go back to November 1st of 2020, and you look at our finalized contracted rates, they were $2.20 a mile for the average rate. If you go back and look at it now, it's $2.72. So over this year period, we've had the average finalized contract rate move up 52 cents per mile. And we've seen a lot of those increases here recently as well. And as we get into fourth quarter, some of these companies have gone to carriers and done short-term contracts to ensure that their goods are going to move, or to have a higher percentage of their capacity that's going to move. So that's causing these carriers to drop back into compliance. So even though this has come back down here some, that does not mean that spot rates have actually gone down either. Spot rates are still, the spot market, the carriers are still very well in control of the spot market. So that's going to keep these rates elevated.
Yeah, simply a function of just contract rates coming up higher. That's why we're seeing OTRI come down. But let's not forget that, we've gotten very desensitized to a 19% OTRI. That, we think that this is momentum on the downside. We were talking to Zach about this. A 19% OTRI would be followed by 5% more capacity within 6 months, every time prior to this.
And it's a great point, because I've seen even a lot on social media where these drivers got used to very, very high rates, and they have maybe dropped down some on some lanes, and they're really complaining about it.
Yeah.
And it's like, hey man, if you look back at 2019, this rate is nearly double, what you were getting, over a year ago, because they're complaining about this.
Yeah.
And it's because they got very used to those extremely high rates. And as I was talking to one of my colleagues, I used to run Boston back to Harrisburg, moving our trucks back from, just to get them out of the Northeast back to Harrisburg. If I got $1.15 a mile, I was loving that. That was great. $1.15 all in. Now it's averaging $3.10 a mile. Yeah. And unheard of. But, that's also the Northeast. There's been a lot of problems up there. Let's pop forward right quick to the next chart. We got a map here. I'll go through this real quickly here. This is the reefer 1 week change. So you can kind of see around here, some areas in Florida, Savannah. These areas have picked up with some rejection rates, Dallas, Fort Worth, and then kind of some rural areas up here in the Midwest. This is most of the areas that have increased week over week with Reefer. Seen some areas kind of going down a little bit. Southern California, they might have gone down a little bit, but do not worry. Rates out of Southern California, you can still probably get $10,000, $11,000 loads going to the Northeast very easy. Next chart here, we'll see the week over week change for dry van. A lot more blue, and a lot more in the Southeast here. Some of the Midwest, Chicago, Joliet. But these are maps that you need to watch definitely over the next 3 or 4 weeks as we get in the holiday season. This is a map that you need to be watching.
All right, Donnie. Good insights today. We'll check back in with you here in a moment.